What is going on, YouTube? Welcome to the Living Freed channel. My name is Tyler Freed, and in this video, I'm going to be talking about whether or not starting a trucking business is too little return for such high risk. Is it true that trucking is a very high risk business? And is it riskier than other businesses that you could start in different industries? I'm going to get into that. I'm going to talk about the different stages of risk for your money, and how important it is to figure out what type of risk you can tolerate. Before you put your money into anything, you need to figure out what type of risk you can tolerate. So if you're thinking about being an owner operator or a fleet owner, you want to start a business in this industry, or you're somebody that wants to start a business in another industry, I think this video will help you, and you need to stay tuned till the very end, because first, again, I'm going to talk about the different stages of risk when it comes to your money and how important it is to understand that when you're an investor. Because, if you start a business, you're investing. That's what you're doing. Whether you buy a bond or stocks or real estate or start your own business, you're an investor whether you know it or not, and you need to understand the different levels of risk in investing. So I'm going to touch on that first, and then secondly, I'm going to discuss the industry that I'm in, trucking in general, and how I see what type of risks I see in trucking, and then lastly, whether I think this person has a point who made a comment. Well, why am I making this video? A person made a comment on a previous video I made where I talked about I had four trucks out of the 6 trucks I own. I had 4 trucks that had repairs done on them in 1 week, and it cost me somewhere around like $6,000 that week. And it wasn't the greatest week in the world, and it's one of the worst weeks I've had, running this fleet so far. And, the person commented and said, look, there's too little reward for such high risk starting a trucking business. So that is what's sparking this video. But I do want to talk about how that's the case. Look, business isn't for everybody. People being business owners, starting their own business is not for everybody. But if you do have that interest, you need to stay tuned till the end, like I said. But, because I believe, and it's not just I believe, I know that trucking is no different than any other industry. And, you have to understand that business, I'm about to go through all the stages of risk. Starting a business and being successful with that, you have about you got to become part of the 1%. Most people who start a business fail, go out of business. Most businesses in America, 90% of them are closed up. They're no longer in business after 5 years. And after 10 years, it's like the ones that survived 9 out of 10 of those after 10 years are out of business. So in 10 years, 99% of businesses fail. What makes me think I'm going to be part of that 1%, you may ask? Well, I do believe I will be part of that 1%. And there's certain things that I do and I did to learn how to become part of that 1%. 100%. That's the truth. And you can do the same thing. You have to be willing to study. You have to be willing to, create the right strategy and plan, but you can do it. No matter what business you're starting, you can do it. And I'm going to get into that. So what are the different stages? You just have to understand that's the risk of business in general, trucking, any other business. But what are the different stages of risk with your money? Because when you go to start a business, you're laying out cash to invest in a business or invest in something and expecting a particular rate of return over a certain amount of time. And that's what you're doing, whether you put your money in a bank account, buy a bond, buy a stock, buy an index fund, buy real estate, start a business, right? Well, what are the different levels of risk? In my opinion, here's how it goes, okay? 1, if you stick your money in a bank account, that is literally the least riskiest thing you can do. Just putting it in a savings account and getting whatever percent they pay at the bank. Now, there is some risk to that, though, to be clear. There is. What is the risk of that? you lose your purchasing power due to inflation. So when the government prints money and there's more money chasing the same products and services, prices go up over time. So if you just keep your money in a bank account and it's losing purchasing power over time, that's actually kind of risky. So really you want to have your money in something more a little more risky in terms of volatility than that, because you are losing your money to purchasing, or your purchasing power, due to inflation. And but that is the least risky in terms of like putting it in there and it falling 20% or 30%. Yeah, that's not going to happen. It will, inflation will just silently erode the purchasing power of that money that you have in there. So there's that. There's the savings part of it. And I would recommend, if that's what you want to do, get as high yield of a savings account as you can possibly get. The second thing would be like a money market, which is pretty much the same thing. A money market might pay you a little bit more interest than just savings. And so, nowadays, right now, with interest rates where they're at, you can get like 3.5–4% on your money a year putting your money in a money market, but you're not going to have any of the volatility that you will have like investing in stocks. So I'd say cash, straight cash, bank account, money market. Then the third thing would be like US Treasuries. I would say that's the third riskiest, buying bonds, lending your money to a government or a corporation, and they pay you an interest rate over a fixed amount of time and your principal back over a fixed amount of time. That's probably about third. It's a little higher risk than, say, just a savings account or a money market. And then after bonds, you get into things like, in my opinion, like mutual funds or index funds, where you're investing in a broad, highly diversified investment. But this is where you start getting into volatility. This is where you start getting into, hey, if I invest $10,000, some years the stock market can fall 30%, 25%, or it can be up 25%, 30%, but you have those big swings. Even if you're buying like a low cost index fund, which I'm a very big fan of and a proponent of, and I talk a lot about, but there is a lot more volatility and higher risk in terms of volatility in the short run than like cash and bonds and stuff like that. And so but the higher the risk you take by investing in, say, a S&P 500 index, equals higher return over time. Because when you buy into, let's say, a low-cost index fund, you are buying into businesses. If you buy the S&P 500, you own a piece of the largest 500 companies in the world, and businesses are a lot more volatile than debt instruments like bonds or just putting your money in cash. You're going to have the ups and downs of the market because, again, businesses are just a lot more volatile than just sticking your money in a bank account. And when you own even an index fund, you are taking a little bit more risk short term for that long term gain. Then after like index, and then mutual funds are the same thing. Like if you invest with a money manager and they invest your money in one of their funds, they actively manage that fund. That's also, but if it's diversified, and they're building that portfolio to match or beat the return of, let's say, the S&P 500, that's going to be kind of the same thing as buying an index in a way. You may underperform, you may overperform, but they'll track closely. But there still is that volatility because they're investing that money into security stocks, right? And stocks are just more risky. Even when you own a broad index or a mutual fund, they're just more risky than, cash and, bonds, right? After you get after like mutual funds and index funds, then it gets a little more risky if you want to start picking your own stocks. That's a lot higher risk than owning like the S&P 500 index. However, if you want to learn how to do that, you can. And I would recommend you really learn how to analyze a business in order to be a successful stock market investor that picks their own stocks and builds their own portfolio. You really need to know how to analyze a business. You need to know how to analyze stocks. And if you want to do that, you can do that. Just get educated before you do it. But moral of the story, when you invest in single stocks, that is definitely a lot higher risk and a lot higher volatility than investing in an index fund or a mutual fund or the cash and bonds and so on and so forth. I'm going through the stages just so you understand. But some people are willing to do that. Some people are like, look, I'm willing to take that higher risk because your success rate is very low. The success rate of beating, let's say you want to be a single stock picker, 95% of professionals who do that for a living underperform a low-cost index fund. They do over the very long run. So if you're an individual who's not a professional, who doesn't know how to analyze companies and stocks and all that, your chances of success are even lower than those professionals who do that for a living. But if you want to try to do that, you can, and you might have success. Who knows? You may have success, but you definitely are taking a lot higher risk investing in single stocks versus an index fund and all the other things I just discussed. So that's for like paper assets. That's the risk spectrum for paper assets. Then after that, I would say now we're getting into like starting your own business or owning physical assets. And I would say, after that, like real estate, which is something I'm also a fan of, but real estate's a lot harder to be successful at than buying an index fund, in my opinion. I would say real estate's risky. Why? Because most people don't have the capital, the education, or the experience to be successful at real estate. But if you do have that and you do know what you're doing, you can make a lot of money in real estate, but it's more of an active investment than like an index fund or owning bonds or sticking your money in cash or whatever. It's definitely a lot harder in terms of the management of it. You can't just buy it and forget it. No, you do have to run it like a business because owning real estate is a business. So I would say real estate is definitely more risky than like just owning an index fund or sticking your money in cash. But I would also say real estate is less risky than starting a business, and I'll get into why that is. But so that now we're just going through the spectrum. Like I said, don't worry. Stay tuned till the end because I'm going to get into the trucking part. It'll all make sense in the end. But that's the spectrum. Then after that, it's starting your own business or investing in other people's businesses, that like private businesses. That's where I say you're starting to get into a lot higher risk investments. Okay, and the reason why is because 90% of businesses fail in America after 5 years since their inception. After 10 years, 99% fail in America. Most businesses fail. So when you invest in someone else's startup or your own startup, your chances of success are very low. Trucking is no different. And I'm going to talk about what you need to understand to be successful in business. And I'm going to use trucking as an example. But to be successful in business, there's certain things you got to do to be successful in business. Okay? So this doesn't matter what industry. The guy said, too high risk for little reward. That's not true. If you have the capital, you have the experience and education and the right strategy, you can have exponential reward starting your own business. I just said 99% of businesses fail in 10 years, but the ones that succeed get richer, far richer than they could ever imagine in their life. And I do believe that I will be part of the 1% in trucking. And I know a lot of you will be offended by that, but I think I will be part of the 1% that do succeed. And I'll tell you why, and you'll see why at the end. Because there's things I learned before I started this business that most people don't take the time to educate themselves about. So every business is like that. Trucking is no exception. 99% of them fail after 10 years. 90% of them fail after 5. So what gives? Why did I start a business? If I know those statistics, why did I buy a truck? Why did I buy multiple trucks? Why am I doing this? Why am I doing this when I have weeks where I got to pay $6,000 out of pocket for truck repairs? Why am I doing that? I'll tell you why. Because I'm a big fan of investing in index funds and passive investments, but I also believe the way to get far richer than you could ever imagine is, again, by starting a business and being successful at that. The richest people in the world started their own businesses and invested in businesses. That's the richest people in the world. And I'm willing to, as long as I know what I'm doing and have the confidence that I can be successful at it, I'm willing to take that risk. I'm willing to go against the grain and, and try to beat the statistics and not become part of the 99%, but become part of the 1%. And if that's you that wants to do that, this is what you need to do. Before you start a business, you need to understand that industry. Before I started the trucking business that I started, I had to learn about trucking. One, I read every book that I possibly could about how to start a trucking business and how to run a trucking business. These were books written by people who started, built, and sold their own companies in this industry. I read books. I read books about business in general, not just the trucking industry, but business in general. Moral of the story, I got educated about business, trucking. I also read a lot of books about finance, so subjects like accounting and marketing and sales and things like that you have to know. You have to know those things in order to be successful in business. You have to know those things. And a successful investor as well. You need to understand business to be successful at investing. So that's what I did. That's step one. I studied the market while I was driving. I drove for like 6 years before I bought my first truck. And for those 6 years, I was stacking my money and learning as much as I could about this business. That's what I was doing. That's all I did. I ate, sleep, and breathed learning. That's what I did. And, eventually when I had the amount of money I needed to do what I wanted to do, I decided to go in and buy my first truck. I drove for a year and just to learn what I was doing as a single owner operator. And then once I felt confident in being able to add a truck and be successful with that and add multiple trucks, that's when I went all in this last year. But moral of the story is I got educated and I learned about this industry. And what did I do? I not just read books and all that. I studied. I looked for companies that had been in business for a really long time. I looked at companies like Crete. I looked at companies like JB Hunt and Knight and Swift, and I studied the companies. Prime. What is the difference between these companies and the majority of owner operators and fleet owners that aren't successful? They don't make it. How did these companies, especially like Crete, how did they survive 2000, 2008, COVID, all these different crashes we've had in the economy? How did they do that? Okay, so here it goes. Number one, you need to know that the most important thing when it comes to business is, do you have customers to sell your product or service to? Do you have good, consistent paying customers? And can you rely on those customers for the long run? So what does that mean? That means that if you are going to be an owner operator, whether you want to get your own authority or lease onto a carrier is irrelevant. You need to, if you're going to get your own authority, in my opinion, You need to get it. Yeah, you're going to work for brokers and deal with the spot market and the ups and downs of that, but you need to establish a relationship, and relationships plural, with brokers, so that you no longer have to rely off the spot market or on the load board for your loads. You can go directly to them because they know you're a great carrier and they can trust you, and they're willing to pay you more and consistently pay you more to do the same service that anybody else can do in this industry. Everybody can drive a truck. If you own a truck, you're in business, man. You can go in business. That doesn't mean you're going to be successful, though. Not everybody's good at building relationships. Not everybody's good at providing great customer service. So that needs to be you. If you're going to have your own authority, that's what I would do. That's what I'm gonna do when I start my own authority. Is I know I'll have to pay my dues and get established and haul for brokers and all that, but the first thing I'm gonna be doing is, hey, how can I not be dependent on the ups and downs of the market and get good, consistent freight? And that way I have, what did I just say? A consistent customer base to sell my services to. Building relationships with brokers, and then eventually get your own customers, direct customers. That's the best thing you can do in trucking. That's what companies like Crete, Prime, Knight, Swift, all the companies that have made it through all these ups and downs and been successful in the industry, no matter what time period we're in, that's what they've done. Look around you. Look at these companies. Look, it's called contract freight, building relationships. That's the goal. So number one, you need good, consistent customers that are reliable. That's number one. So what did I do? I didn't get my own authority. I'm leased on, and I would do that. If you're going to lease on to a carrier like I did to start out, I would find a company who has contract freight and or good relationships with brokers, so that you're not dependent on the ups and downs of the market. You want to eliminate that. You don't want that volatility with your revenue. You don't. You want good, consistent revenue. It's better to take consistent revenue than do really great in the good times and really awful, barely make it through the bad times. You want to get into a position where you have good, reliable customers to sell your services to. That's any business, right? That's any business. Think about it. So that's step one after getting educated. When you first start, who are my customers going to be? How am I going to get those? I decided to lease on to Crete. Why? Because Crete is 100% contract freight. When I haul for Crete, I know exactly what each truck can expect to make every single week. I can do projections of revenue, projections of profit, projections of my growth rate, and I don't got to worry about the ups and downs of the market. I'm willing to eventually dabble in the spot market and dabble with brokers and all that, but just getting started, I'm so glad I started with a company that has that customer base, because they did the hardest thing in trucking, which is get your own customers. And that's the number one key to success. Without great customers, there is no trucking business, and you're not going to be successful. So that's number one. Number two, companies like Crete Carrier, they have their finances in order. Crete is a debt-free company. Crete owns all their trucks, their trailers, their properties, everything outright. So I studied them. I'm like, man, well, no wonder they make it through all the down times. No wonder when freight slows down, they still make it and they still do well. And they're able to capitalize when all these other trucking companies are going out of business. They're able to capitalize and build market share because they're going to scoop up those customers from those companies that went under, that were over leveraged and in debt. And I talk about this all the time, but it's just the way it is. Crete is able to survive those times and grow when times are bad because they're debt free. They have a lower cost of operation than the majority of mega carriers, the majority of mid-size and small carriers. Truck for truck, they have a very low cost of operation. So I said, okay, well, I want to get my own customer, direct customers, and or have relationships with brokers, good consistent freight. I want to have that. Step two, I need to have my finances in order. I need to have debt-free equipment. Every truck I buy, if I buy trailers, if I, whatever I'm doing, whether it's authority or leased on, doesn't matter. I need to have a debt-free business. I need to have zero payments on all my equipment. Why? So if freight slows down, if things get tough, I'm not going under. I'm able to survive those times. Also, I can haul freight for cheaper than the majority of other trucking companies, because those companies that have a ton of debt, they have debt on every truck, they have a higher cost of operation than I do. Same with Crete. Most companies and most carriers have a higher cost of operation than Crete does. Why? Because Crete doesn't have debt. They don't have those payments. I modeled my business after them. Okay, Crete did this, it works, that's what I'm gonna do. And then, the third thing, and I'm sure, I don't know a whole lot about this aspect of them, but I'm sure they do have huge cash reserves per truck, per piece of equipment. I'm sure they have huge cash reserves. That is another big thing. When you're running a business of any kind, you need to have retained earnings. You need to have huge cash reserves. If you do not have that, if you are deeply in debt and don't have huge cash reserves, you will not survive the good times. You will not. You will go out of business. You will. 100%. 99% of businesses fail. And those 99% of businesses that failed did not do any of the stuff I'm talking about. They didn't. So, customers, debt-free, cash reserves. I personally like to have $20,000 to $30,000 in that range as an emergency fund per truck I own. If I owned a trailer, I would have an emergency fund for that trailer as well. I don't own any trailers currently, but if I did, I would have an emergency fund for that equipment as well. But every truck I buy, it's the purchase price, gotta pay cash, plus emergency fund, then I can buy a truck. So if that truck's gonna cost me $70,000, I gotta have $90,000 to buy that truck. I will not do it unless I have that much money to buy that truck to expand. I will not do it because it's not worth it. Like the guy said, high risk, too little reward. Well, not if you're set up in this way. Not if you have great consistent freight to pull and you're out of debt and have an emergency fund for all your equipment. You will do very well. You're not going to do well every week because you will have breakdowns. There will be times where the freight slows down 100%. The economy's not doing as well. You will have that. That is going to happen in every business, by the way. Every business has slow seasons. Every business has expenses that come up. Every business has this. I'm just using trucking as an example, but that's the way it works. Okay? And then after you got your customers, you got your finances in order, you're debt free, have cash reserves, then you start getting into systems. See, I had to build systems to run my fleet. Okay? There are different systems I have for everything. Systems I have on how my dispatcher or how my trucks run, and get their loads and get dispatched. Systems for payroll, systems for how I communicate with drivers. Hey, what's the system for dealing with breakdowns? What's the system for tax planning? What's the system for this? What's the system for that? You got to have great systems to run a business. Most of you do not have that. You're very disorganized. You got to be very organized, have all your paperwork together. You have to do great bookkeeping, great accounting, and, keep track of everything that's going on. You got to have great communication as well with, the people that you're working for and the people that work for you. You have to have systems for that, communication systems. You got to have that. So systems is everything in running a business and running a trucking business, 100%. And then, after that, and I did mention communication. After that, it is communication. What's your relationship with that company you're leased onto? What's your relationship with those brokers? What are you a pleasure to speak to when you call them, or are you a pain? Do they cringe when they see your number pop up? You got to learn how to communicate with people and, be professional. Most of you are not willing to learn how to do that. And you wonder why you're not getting good freight. You wonder why your dispatcher or your, whoever you're leased onto, they're not willing to work with you. They're not willing to throw you a bone. It's because you're a poor communicator. You're a negative person. You're not polite. You're not professional, and that's not going to get you far. You got to learn how to communicate. Moral of the story, I got to know how to communicate with my drivers, the people that drive for me. I got to be professional with them. I got to, know what I'm doing too when they call and there's a situation going on. I got to know what I'm doing to figure that out, and communicate what to do and do it effectively, right? So communication after customers and finances and systems, then it's communication. And and there's other things too. I don't want to make this video too long, but moral of the story, guys, I'm kind of ranting about business because I love talking about this, but in order to make a business worth it, you got to know what you're doing. You got to have one, education, know about what you're trying to do. Two, get the experience. How do you get the experience? You do it. Three, study other successful companies and people doing what you want to do. And then four, create your own plan and execute that plan. It's not rocket, especially trucking, it's not rocket science, but there are certain things you need to do to thrive no matter what in this business. And I think it's the same thing with every business. Is it low, or is it too low of a return and too high of a risk for you, the person that made that comment? Probably. Because you probably don't have the education, experience, and capital to be successful. And that's fine. There's nothing wrong with that. Just do something else with your money if you don't think it's worth it. Business isn't for everybody. 99% of people should be employees, really, because they're not willing to put in the time, energy, and effort to be successful in business. I'm never off. To end the video, I don't have a day off. There's no such thing as a day off when you're running a successful business or a business in general. If you think you're going to invest in a business and start one and you're going to just work 9 to 5 and kick your feet up and relax, that ain't the thing. That ain't the case. If you want to be successful in business, you're going to be working every single day. There's days where I work a lot less, but I'm always on call. Even when I'm off, I'm still on call. My trucks are running every day. I always have a truck running every day. And so there's always a chance where I can get a call from a driver every day. And for those people that run their own business, especially in trucking, that's the way it is. That's the way it is. But I'm willing to pay that price right now to build an asset that is worth way more money than owning an index fund or a stock. Nothing wrong with those things, but I'm building a legitimate asset. As I grow, as I continue to add trucks, as I continue to expand my business, the worth of that business goes up and up and up and up and up. And yeah, I'm gonna have weeks like I talked about, where 4 or 5 trucks have repair bills, and it's not a great week for the fleet. But I'm also going to have those weeks and those months where I make more money than I could ever imagine making in a week or in a month. That's also the case. There's ups and downs in business. There's ups and downs in trucking. There's ups and downs in investing in stocks and real estate. And you just got to figure out what's your risk tolerance. And if you want to start a business, though, to end with this, you need to get educated. You need to have a great plan, and you better have a lot of discipline, man. If you're not a disciplined person, don't do it. Don't do it. That's all I can say. So those are some things you need to know to be successful in trucking in this business. And to make it not a high risk endeavor and make it a rewarding endeavor, those are some things you can do. So God bless. I appreciate every one of you for watching. If you want me to do more content like this in the future, let me know in the comment section below. But for now, peace out and stay tuned for the next video.